Okay, well, hello everyone. Hopefully everyone can see me and hear me. Just throw a message in the chat if there's any dramas. But thanks for all tuning in. This is the first time I've done one of these webinars, and to be honest, I don't do a lot of these online Zoom things. So hopefully I get the technology right and it all works out over the course of the next half hour. What I thought I'd do is, just try to keep things sort of fairly light. I just wanted to cover off on, just highlight a few things about, what I'm seeing in the market, what stocks that that I've got my eye on, what I'm looking at. But then I thought, of course, everyone likes to, get us to have a look at the charts. So I'll open up the chat later, and I'll just get a whole lot of, I guess, requests, and we can pull up the charts and have a bit of a look at that as well. Right. So I thought it'd be interesting just to have a look at sort of what's happened over the last several weeks. I mean, it's been definitely a very interesting month on the market. A lot's happened, but I guess what it's telling me is, it is very much worth thinking about. What is the overall narrative, and what is everyone saying? Is everyone on the same page? What's the consensus? Because often I think the better opportunities are basically when the consensus is saying one thing, but then they get it wrong. So and I think we're seeing some great examples of that recently. So as we know, if we look back, so here's an article here from mid-February, just talking about the higher interest rates are coming, and further along in the article, they're talking about the Reserve Bank looking to raise its cash rate to 4.1%. So as we recall, the market initially peaked there right at the end of January, start of February, and then the pullback really had to do with this increasing, I guess, view that interest rates were just going to have to go a lot higher than what we thought they were going to be at the start of the year, and it did seem like it was a very one-sided, definitely a very one-sided narrative. So again, the opportunities, I guess, are when the market gets it wrong. I mean, we can see that, further along, we're talking about the US market. As we know, they're starting to price in higher interest rate hikes. So just when we thought at the start of the year there might have been a 25 basis point increase, and that may well be it, markets were expecting that the Jerome Powell would be doing 50 basis points over in the US. And we could see, the main headlines here. They're expecting the Fed to raise by 0.5 percentage point. Fixed income markets see an 8 in 10 chance they'll make the big move there in March. Of course, we know in the end it was only 25 basis points, but just very interesting to see, very one-sided. So the narrative was very much interest rates are going to have to go up a lot more than what people are expecting. But it just seemed like everyone was on that bandwagon. Everyone's talking recession. It's interesting when you hear the economists say, well, if inflation is here, interest rates are going to have to go a lot higher, but they seem to be discounting all the other, they like to say all else being equal, this is what needs to happen, but it's not all else being equal. There's, plenty of moving parts in the economy. So, moving on to this next slide here, we could see that, this is basically the two-year bond rate, 2-year treasury rates in the US. So again, we could see hovering around 4% up until the start of February, and the market peaked as this was going up. So, effectively pricing in from a 4% interest rate to over 5%. So huge move. And then, of course, we have the banking crisis, and now we're back down to these sorts of levels. And, now it looks like there's probably not going to be any more rate hikes. So, maybe one more, but that's at the most. And, money markets are pricing in rate cuts later this year. Yes, the economists are saying, well, we're going to need more, but you've got an economist getting paid a salary, then you've got the bond markets moving vast sums of money. I'd rather pay attention to the money flows. So, look, I think it's positive that the interest rates seem to be peaking. Yes, they're peaking for the wrong reason because of the bank crisis, but we are seeing, inflation has peaked as well. I think all of these things are a positive for the markets, and I'm actually feeling quite optimistic. Again, I think the narrative is very much, the economy's in trouble. There's going to be earnings downgrades. There'll be a recession, et cetera, et cetera. But if we have a look at another chart here so this is the light blue line is the S&P 500, and the dark blue line is you'd see forward 12-month earning per share, change in earnings per share. That actually peaked a year ago. So, just be careful when you hear about, well, earnings are going to fall off the cliff and the market's going to tank. Well, earnings growth has been declining for a year now. On average, earnings declines last about 16 months, so about 12 months into an earnings decline. Now, is there going to be a recession? Well, everyone's saying there is. So again, what if the consensus has it wrong? Or what if we've already experienced a recession in the US? I mean, they're not calling it a recession over there because of the strong jobs growth, but we have had weak economic activity last year, so we may have seen a recession in the US under the surface, and potentially we've got growth sort of potentially in the third quarter of this year starting to take off again, and as long as inflation's contained, I just don't see a huge sell-off in the market because of that. So just something to bear in mind. All the negativity out there, they may well be wrong. This is another chart that we put together where the red is the drawdown in the S&P 500. It's a bit hard to read, and the blue's the earnings drawdown. So this is where we are here. We have had earnings growth go backwards in the US already, and obviously the market's pulled back because of that. Employment is still strong, as I said, and if rates have peaked, I just don't see at this point in time. We may have to change our view, but at this point in time, I don't see a huge need for the markets to get to pull back here. And just another chart I thought was interesting is just the seasonality of the S&P 500. So this is where we are now. We've just had that. Often it bottoms in March and runs up, and then May's, as we all know, could be a weak month. So we're in a seasonally strong period for the S&P 500 as well. So I think it's looking good from this point at the moment. If I just go and have a look at some charts, what have we been looking at recently? So just in our reports, in terms of the ASX 200, so this is our report from a couple of weeks ago. Look, I thought we'd find support at 7,200. Didn't work out, but it did become quite oversold. Last time it was this oversold was back in June, and as we know, we're now getting a bit of a bounce. In terms of the US market, so what we're looking at, I think this is my report from last week. So just noticing that we've got this sort of higher low and this bullish sort of bear flag, and just in the last day or two we've broken out. So I think all of that's looking looking pretty positive. Stocks that I've looked at over the last few weeks that I like include, sorry, bear with me, I like the look of, I thought Sandfire was looking interesting. That's just sort of broken out now, and I think if you get it consolidating under 650, potentially got some upside there. The other one that we had in the report last week, bit more, I suppose a bit more risky in a way is Linus. So what we've had was another sort of oversold condition, tightening up, and just I noticed today it looks like it's starting to get a bit of a move on. So that's another one that I like to look of. Newcrest Mining. So we sort of identified this, well, we've looked at it a few times over the last few months. We sort of identified this channel. It's back to the top of the channel now, but again, I think if you see a pullback in Newcrest, so with gold, it's not something that you necessarily buy because you're viewing it as a hedge. Gold price, it tends to move higher with a falling US dollar. So if the US dollar peaked last year, gold should go up. So basically, if the markets look good, there's less need for US dollars as a safe haven. So the US dollar goes down and the gold price should go up, especially if we don't have rates going up anymore either, because of course, when you hold gold, you don't get an income. So when rates go up, gold becomes less attractive. Therefore, if rates have peaked, gold starts to look a bit more interesting again. The other one that we had in the report recently was, sorry, bear with me, was Fortescue. So I quite like the look of the way it's been just congesting under the 2022 high. Obviously had a very good week last week. I think if it breaks above $23, that's sort of the next buy. So there's some recent stocks that I've looked at that I like. In tomorrow's report, I'll have charts on Macquarie Group. I think Macquarie Group looks good here. Mineral Resources. Actually, I'll pull up the chart. So if we've got, this is sort of a daily chart of Macquarie, so we could see it's put in a couple of higher lows now. And this to me looks a little bit like this period here at the end of December where, it started to sort of level off here and now it's bounced up. It was oversold, buy signal on the MACD. If I look at a weekly chart, potentially we've got a bit of resistance here around 180, but I think if it can get back above that, you've essentially got a downtrend here that's over, and now you've got a new uptrend beginning. So Macquarie's looking good, and as I mentioned, I think Mineral Resources, again, you've just got this series of higher highs and higher lows. So again, sort of rounding out here and then gapping up is making it look pretty good. What else? Yeah, the big miners. So I just think BHP and Fortescue looking quite good here. The energy stocks, obviously, they've jumped up a bit too much today, and they couldn't sustain those gains into the afternoon. But I think there's further upside in energy stocks as well. So yeah, look, I'm pretty optimistic from this point on the market. And if we have a look at the XJO, said we got that sort of oversold situation when it retested this low, and sort of similar to this. I think we were saying at the time, similar situation to that low in September where you did a bit of a retest and off it went. Now, I guess the real bullish case is if we look at the weekly. So this is a weekly chart of the XJO. Now, let's say in the next few weeks, we're back up here to 7,500. Now, if you were to see the market back up there. For those who are fairly familiar with charting, you'd look at all of this and say, well, that's an inverse head and shoulders. That'll be a fifth attempt at 7,500. So that would look really bullish. I mean, I could see a situation where the market is back up to this level again, and the more you knock on a resistance level, the more you weaken it. So, we could be breaking this and be sitting at all-time highs later this year. I mean, it does sound crazy, but that's probably why it might end up happening, because just no one's expecting it. Everyone's quite bearish. But look, things might change, and in a few weeks from now, we may have to change our views. But at the moment, I think things are looking fairly constructive. So, yeah, look, so I think what I'll do is I might just, I've already been talking about 20 minutes, so let's have a look at some charts. If anyone wants to throw in some ideas in the chat, I could see a couple coming through now. So I'll start dealing with those. So I've got Pilbara and lithium. So again, lithium, I mean, obviously ran way too hot. Everyone loved it last year. But up until a few weeks ago, everyone was, in some ways hating it. And obviously the lithium price had come down. But yeah, a lot of stories about it being all over. And as we know, with the offer with Liontown, it's put a renewed focus on that sector. So, I mean, this is Pilbara. What I looked about, actually, I've got this in the report tomorrow as well. So what I've noticed is it broke to a new low, but the RSI had bottomed at this point, not in that point. So that's bullish divergence. And then with the big move up here, it looks like this was a false break to the downside. So I'd expect PLS to head higher. The other stock in the chat here I could see is Bank of Queensland. So look, I'm not a fan of the regionals. I just think that unfortunately they're in a situation where it's too competitive for them. And the only way you see upside is if you can occasionally make the case that they're a bit too cheap but too oversold. But ultimately over time they just won't perform as well as the majors. If I have a look at Bank of Queensland, I'll just move to a weekly chart. Yeah, to me this doesn't look good. So here we've got that situation where it's knocking on a support level, too many hits on that level, and it risks falling further. So yeah, don't like the look of that one. All right, I'll try to fly through some of these. Hopefully I can get to everyone. MMR, never heard of this one. So look, all I could see is a downtrend here, and obviously it doesn't look very liquid. I'm sorry, so I can't really say anything too intelligent on that one. Next one's Flight Centre. Let's have a look. Weekly chart. Yeah, I don't really know what to make of that, to be honest. I guess it looks pretty range bound, doesn't it? Sharp move down here on the volume, and look how low the volume is on the way back up. So not a good sign, to be honest. What have we got? New Hope. Yeah, look, I think New Hope's sort of similar to that PLS chart where you've got that looks like a false break. So it's taken out everyone's stops only to launch higher. Consolidation, gap up today. Yeah, this one looks like it's going to head higher. CSL, I think CSL looks good. Get rid of some of these old lines. I just like looking at the weekly chart of CSL. So you've got a big uptrend, big sideways consolidation. And I think when it eventually breaks out of this, you'll be seeing decent upside. Remember, last time we had market pullbacks on rising rates was here at the end of 2018. Obviously, they started cutting rates and CSL rallied 50%. they're not cutting rates yet, but yeah, once they do, CSL, because it's high PE, sensitive to interest rates, should do well when they cut rates. Domino's Pizza, look, big downtrend. I'm sorry, I don't have anything positive on this one. It really does look terrible. Someone's asking about Woodside. So yeah, look, I like Woodside. This is one that we're buying in the last couple of weeks. So I like the way it again seemingly broke support, sort of gapped down, but then it sort of gapped back up here, sort of leaving this reversal. So I think that it's a bit of a messy chart. I mean, if I look at I suppose if I just zoom out a bit, it does have a trend to it, but just not very clean. But look, I'm quite bullish oil over the next year or two. Yeah, it's not going away anytime soon. What else do we have? I see a question on graphite producers well into production. Not really sure. I know that RNU is a graphite producer, isn't it? That looks actually that looks pretty good. Again, looks like we've got a little false break here, only for it to reverse. Just look at that volume. So massive volumes come in as soon as it broke 20 cents. So again, that looks like it's heading higher. And for those who think I'm talking too fast, sorry, I will post up the I will put a recording up of the webinar, assuming I can figure out all the technology. So it should be up in the next day or two, so you can go back over it again. Treasury wines. Yeah, so to me that looks like a sort of an uptrend there that's just been broken. So it's not looking too crash hot at the moment. Goodman Group, I like Goodman Group. I've still got my clients holding this one from a couple of months back, a few months back. Again, looks like we've got a nice sort of uptrend here, pull back, rally, again, consolidation, and to me this looks quite bullish. Good volume, excuse me, good volume up today as well. So that's looking good. RRL, so yeah, a bit of a messy chart, but I think gold stocks generally should head higher from here. Whoops. Santos, yeah, I've still got this line here from when I last looked at it. It's just got this, excuse me, trading range. I'm losing my voice. But I think we need to see some kind of resolution to either direction there. Most tech I really like. Just remove some of these old lines. That's clearly in an uptrend and recent breakout. James Hardy. So I'm losing my voice after a window. Yeah, I like the way, I think I had this in the report last week. So, rally off the lows, consolidation looks like it's getting a bit of a move on again. Potential sort of contrarian position there. James Hardy, construction, US. Apparently, US is going into recession. What if they're wrong? Well, yeah, it could be right, and James Hardy has problems. But yeah, if the market's wrong about that, this could be definitely one to keep an eye on, because as we can see, it's come back. It's come back a long way. Yeah, I think there's potential opportunity there. We might. We may need to see the next quarterly results. CXL, Calix. Yeah, look, I don't like how it's come back that deep before bouncing, but look, a bit oversold. So yeah, you might see a little bit more upside. Yeah, look, I think all right, I'll just take what's on the screen at the moment, just one each, sorry, and we'll wrap it up. So we've got MAD. Yeah, I don't know what this company is, but again, just got this sort of sharp pullback, sharp bounce. Yeah, it's going to need to consolidate. It looks like this is the right level for it to at least, if it can move sideways here, that would be good. I guess I wouldn't want to see it come back below $4. Ramsey, you've got this sort of trading range, don't you? So I think for me, it's just a case of wait for an upside break or hopefully have a downside break. And the last one there from Jeff, I'll take that first one from you. C79. I've never heard of that one. So come up. And yeah, look, doing all the right things. I guess I couldn't chase it up here, but I'm not sure how much volume that is. There's some good volume on the way up. Doesn't look like it's been listed very long. Yeah, look, I don't know the business, sorry, but look, so far there's nice momentum, but maybe a little bit overdone in the short term. So I might wrap it up there. That's the half hour. Look, hopefully, everyone found it worthwhile and the technology worked and everyone could hear me and see the chart. Just drop me an email with any feedback if there are any dramas, and yeah, I'll try to do this again maybe another month or two, and yeah, if there was anything that didn't work, let me know and I'll try to fix it for next time. Otherwise, yeah, hopefully the next few months are better than the next few weeks at least are better than the last few.